welcome to the National Career Guidance Podcast. Our topic today it's about financial literacy. We are here to discuss the most important component of financial literacy, which need to be known by anyone and everyone. So data suggests globally there are about 70% of the global population it's not financially literate, which can cause into serious implications when if you are not financially literate, the way you invest, the way you borrow, the way you spend your money, it's not going to be so that logical, can have very negative impact in both for your personal finances and so does for the national economy. So today, within the matter of next 30 minutes time, we make sure everyone who would watch this podcast are going to be financially literate to positively contribute to the nation's economy. So Mahesh, my first question, what is money?
Thank you, Dan, for having me. In basic essence, money is actually a tool that people can use to exchange for goods and services. You have specific currencies, country-specific currencies like what we have in Sri Lanka, like the rupee, the Indian rupee, the Indonesian rupiah, as well as some common currencies like the euro, which can be used within the European Union. So yes, money is essentially a tool that basically you can use to exchange for goods and services.
Right. So now you know what money is all about. So why it's so important for teens to be financially literate?
Yeah. So I think financial literate at a young age is very important because if you start out at a young age, you also learn the principles of saving. And it also deals with time. If you save 1 rupee when you're 15 and when you become 60, that would have compounded multiple times. So, and also learning financial literacy at a young age allows you to learn about spending patterns and also allows you to think about how you can save money and also invest and also make smart choices in your lifestyle. So I think being financially literate at a young age is a very important tool for youngsters.
And it says what consumerism had done to us. It's sometimes it's really hard to define the real difference between a need and a want. So how will you technically define what is a real need and what is a want?
So I'll take a small theory which is sort of known within the business management students, I would say. It's this theory called Maslow's hierarchy of needs. So we all of us have a basic set of needs that we want to cover: basic food, basic shelter, basic clothing, and once we cover that, we move on to the next stage. So all of us will define these needs as these basic set of needs that all of us should have to have a decent livelihood. And beyond that, I would say it's your lifestyle choice. And for some people, it is of course a choice. But sometimes my advice to some of the teens is, right, while we pursue material things in life, it might be a fancy, car, a fancy apartment. Sometimes after obtaining that, you might also think, okay, am I still happy? So choose carefully with what you spend on. And sometimes later on in life, you might also think that material choices and the material spending you had made may not actually give you the happiness.
So Netflix, it's not a need. And the next question, as someone who's still in the school who wants to improve his finances, how you can have a basic understanding of budgeting?
Right. So I think as a youngster, budgeting is quite important. I can remember vaguely when I was a youngster, just coming out of school, I would say. And I used to have this book that I used to maintain. I used to record a little bit of the income that I used to get. That was basically some tutoring I used to do back at that time, and also helping out some of the senior lecturers to mark some papers that were getting some money. And also I had a relative who was also into a bit of lecturing. He used to didn't have much time and used to give me some pocket money doing some marking. So I used to record all of this, and I also used to record a little bit of my expenses as well. Now, of course, you have apps and all of that and Excel sheets that you can use. So that's basically budgeting. You look at what are your inflows, and as a student, that can be very few things. That can be your what your parents give you as a pocket money, a bit of a few activities that you're doing here and there to earn some pocket money as well. Then you record all your outflows, what you're spending on, right? It can be your daily travel, it can be on your food, it can be on your accommodation, on hostels. So you record all of that, and then you see at the end, do you have anything more than what you spend? That's called a surplus. If you're spending more than what you earn, right, or get, that's called a deficit. So that's essentially what budgeting is. Of course, you shouldn't be in a deficit situation. You should always try to be a surplus. And if you do have a surplus, that's where you're going to save.
So as looking at it, there's no such difference of a nation, and as an individual, you always need to look for a surplus. And Mahesh, how does a bank work?
Right. So essentially, a bank, what it does is it acts as a party which collects money from the public, and it takes that money and gives it to a party which requires that money or lends it out, right? So in between, they keep a certain margin. So for example, they might give its depositors, the people who give them the money, let's say in current today's context, maybe on Sri Lankan rupee investments, about 8%. And they'll take that money and keep a margin and give it back to a potential person that who needs that money, or we call as a borrower, a company or even an individual, maybe around 12% or 13%. That, of course, that rate is determined based on the risk the bank sees with that respective individual or that particular person or the company as well. Further, they also provide certain other services as well, apart from just being a custodian for lending and borrowing. They also can be a safe haven to keep some of your gold, right, in safe lockers, and also give certain financial advisory services as well to their clients on how they should invest and save, and also give certain other banking products for corporates, like, for example, helping them to open a letter of credit. So what's a letter of credit? Essentially, a foreign supplier may not know your company. So the bank will issue a letter of credit, right? And the supplier is then confident that the bank will give them the money regardless of the situation, provided the goods are in good condition when it comes to the customer's hand. So certain products like that, the bank also offers.
And Mahesh, then what is interest and how does it work?
Right. So I will explain interest in two forms, simple interest and the compound interest. So simple interest is actually where you invest with a bank, let's say, and the bank, let's say you invest 100 rupees. The bank will give you a certain return. That's called the interest for your investment with the bank. So let's say you put 100 rupees, let's say the interest rate is 10%, you will get simply 10% at the end of the year. That's simply the simple interest we say. You can take that 10 to your hand and you can spend it if you want to. So compound interest is slightly different, where you tell the bank, look, at the end of 1 year, right, you take the 100 as well as the 10 that you earned, you keep it with you so that it becomes 110, and the subsequent year, it will compound based on the interest rates at that time. So it will just keep on rolling over. That's the ideal situation that you would want to have as a person who is saving and investing. So famously, Albert Einstein told that actually compounding interest is the eighth wonder of the world. And I think I briefly mentioned this at the beginning of the session as well, that if you are able to keep, let's say, 100 rupees with you for 10 years, depending, of course, on the interest rates, give or take, that becomes 200, right? And that's fantastic for you. So that's, in essence, how interest rates work.
So now you all know what interest is. My next question would be, as a nation, yes, we have culturally embraced the concept of like having savings for your future, but we are not a culture who like really encourage our youth to consider investments. So, what's the key difference of saving and investment? And as a young lad or a young lady who would like watch this the podcast, how you can advise where they need to start their investing journey and what are the options they may have?
Yeah, so that's a good question, actually. As historically, as kids, sometimes we used to have this pill, if you remember, right? We just put some coins and some rupees as well. But that's saving. It's not investing, because that's going to sit in your drawer or in the back of your bed, right? And keeps collecting. And sometimes even at home, our parents will, sometimes keep some money, under the mattress, right? That's saving. You collect some money and you keep it there, right? And that's not investing, because that's not increasing that wealth. So what's the difference between saving and investing is investing will create further wealth for you, right? And that's what you want to do. So as a young teenager or a person coming up, right, there are a few basic ones that we can obviously take into account. So you can put some of your savings into a fixed deposit, and you can open a fixed deposit with a minimal amount of money these days, right? You don't have to have big amounts of money to open a fixed deposit. So fixed deposit is a very common product that many banks offer. You can put it for a year, right? You can even put it for 5 years, 7 years, 10 years, depending on what the bank offers. Of course, the longer the tenure, you get a better rate, right? Um, then you have some options like putting some money in treasury bills and bonds with the government. So it's less risky as well, right? So always remember this concept as well. Higher the risk, higher the return. Lower the risk, lower the return. So if you put in a government, they will not obviously fault you. They'll print the money and give you as well. So you can put in treasury bills and bonds. You might get a little bit lower rate, but you're safe that you'll get the money as well. So these are the safe ones. Safest being with the government. Then maybe a little bit more risky, I would say, depending on the bank that you put in. You have the fixed deposits. Of course, when you're putting the money in a bank, check their credit rating. So you may have heard of this Fitch ratings, right? Try to put in a bank which has a good rating, right? Then apart from those very common products that you would put, right, especially fixed deposits, which is a very common way, then you have these shares that you can put as well. You can open an account, CDS account, we say, right, and approach a stock brokering company, and you can put some of your money in shares. Now, that is a whole topic altogether. Of course, in basic essence, you would want to put some of your money in some good companies, right? You want to look at their accounts, see that they're, doing they're profitable, they have a good balance sheet or asset position, and based on that, you can put some money in shares. Of course, sometimes with shares, you might have to wait. Sometimes it can be quick as well. Now, these days, if you take the stock market has picked up, very rapidly over the 1.5 months. You would have made actually more money in one and a half months than you would have put some money fixed deposit that taken you a year. So there is a risk return appetite of that. That's the whole topic altogether. But these are, I would say, the three common ways which, as teenagers that you can. Of course, you can invest in businesses as well. You can invest in your own business, but that all depends on your risk.
Right. So we learn well about investments. Now, as soon as we discuss about the investment, what comes at the flip side of the coin, that is like borrowing. And we always discuss about the danger of debt, especially the Sri Lanka, what we had gone through within the matter of last 3, 4 years time when a country tried to accommodate all the debts in under the moon and the sun. And when the things collapse, we all knew like what can be the results are, right? And having said that, how you may advise any young teenager who would follow us about managing their borrowings and how to stay away from uncontrollable portion of debt.
So I would say, in terms as a teenager, your access to debt instruments are a bit limited, right? Because you don't have much collateral or security to provide as a teenager. But you might be exposed to a few other ways. For example, you might borrow some money from a friend, right? You might borrow some from your friends, relatives, but that's also borrowing. You might have to pay them back. So be careful when it comes to borrowing, right? Because you must be able to see, okay, from your inflow that you're getting on a monthly basis, and if that is has a risk that you think it might fluctuate, then you have to be careful with it. So having a consistent flow of income, then I would say maybe about 20-30% of your income that you're getting on a consistent basis, you can allocate to repay that debt, right, in a proportionate way. So that's borrowings if you take a lump sum. Then another very common way which students, teenagers can have access is a credit card, right? So credit card allows you to go to a shopping center, just punch it, right, and you are able to get the goods, but you haven't paid for it. Now, if you are not very disciplined, right, then you might be enticed to use this card. And also now merchants and business also give discounts to encourage you, right? 30% off, 40% off, right? So that will encourage you to buy those. Sometimes even being adults, we are habitually sort of encouraged to do this, right? So being a teenager, that you might have a bigger appetite, right? And even in restaurants, that's a very common staple, right? So have a limit to the credit card. So for example, see, okay, maybe 50,000, right? 40,000 rupees. Have a limit so that your credit will not exceed that and you can manage that perfectly fine. So that's how I would say on how you can manage that.
So teens, every time you spend anything on your credit card, keep one thing in mind that what you are spending is unearned money. So you have to recover that somewhere down the line. That is you who's responsible to pay that back. And the other most important, the portion of knowledge everyone need to possess that to understand what your rights are, especially the consumer rights, which is like we have most of the time we are only taking that for granted, then we are not much serious as a nation about whatever the rights that you are entitled as a consumer.
Mm.
So this would be the ideal time as you are like getting into the your adulthood to know about your real rights as a
Mm.
consumer.
Mm. That's actually, Diane, a very good question, right? So as a consumer, you have few rights, right? And you of course have in Sri Lanka the Consumer Protection Authority, which as acts as a custodian. If you have been discriminated as a customer or violated as a customer, you can approach them. Right? That's the regulator. But when you buy a product, right, as a company, right, you have a moral obligation to the consumers, and you as a consumer have the right for free choice. Nobody can be obligated and telling you buy this, you are forced to buy this. No, you have the right for choice. And you have also the right to ask the merchant, okay, what does this product constitute of? What are its ingredients? What are its components? Right? What is it made out of? What is the price? Before you buy a product, right, you need to know the price. And even myself, right, I have been caught to some of these things, out of desire, you buy something, right, to see that the price that the merchant is selling is now twofold than what you thought it was, right? So always ask the price before you actually do a purchase, right? So that's another aspect of it. And always see, right, as a consumer, when you buy a product, do you have the equivalent value to that product, right? So that's always a choice that you need to make. If you are getting X to the amount that you spend, if you are not getting X and you're getting X minus 50, there's no point in spending that money. Then in terms of packaging also, right, price, ingredients, details, like I mentioned, should be there. You should not be falsely advertised. For example, the advertisement that you are being shown or a promotion is saying X, Y, Z, but when you get the product, it's A, B, Z. It doesn't match to what you expected. Wrongful advertising, wrongful promotions. So that's also something that you need to be aware of as a consumer.
So, as a sum, it's one thing, but all of you all need to consider as a consumer, you all have the right to be known what your rights are, and also you are carrying a social responsibility. Every time your rights being violated, you need to stand against. One important question, Mahesh. We are living in an era where you are so vulnerable for like all the type of different scams what the people wants to exploit you in many different ways. So having said that, now we hardly find nowadays the robber who may come and poke a knife towards you and try to grab your money out. But except for that, there are hundreds of different scams you may find, and every time the next scam gonna be smarter than the previous. So how these young teens need to be conscious about not to be victims of such scams, and what are the basic understanding, especially when it's come to these fund scams, the pyramids and all, what you supposed to know about the return of an investment merely impossible to be gained, not to get be a victim of any of the if the traps being set.
It's an excellent question, Diane, to be very honest with you, right? Um, it's just not teenagers, I would say, right? Ponzi schemes, pyramid schemes has caught Wall Street in New York with big names who have put celebrities who have put money in these companies and these individuals, and they have lost the money, right? So you have to be very careful when it comes to very fancy schemes or pyramid schemes. Essentially, sometimes you might be approached by an individual, right, who might say, okay, look here, right, if you give me some money in another 1 year, right, okay, let's say you give me 100, I'll give you 200. So you have to be very careful with those kind of schemes. Right? It's not a bank, it's just an individual, or that individual might promote another individual. Look here, this individual that I know, famous person, right, is giving these sort of returns. If you give them the money, you should never put money in those kind of situations. Always when you're giving money, you should check the authenticity of the company that you're investing in. And always check what I like I mentioned before, the credit rate. All banks, financial institutions in Sri Lanka also listed in the Sri Lankan Stock Exchange. That's actually a regulation that the central bank introduced after the collapse of these financial institutions sometime back. So definitely individuals is a no for sure, right? If you're putting money in a financial institution that has to have a credit rating, it's a listed company. If you can check the balance sheet, if you have the knowledge to do so, if they have the net assets, because you have to always see another aspect of it. Okay, if the normal banks are giving around 8%, let's say, a deposit, if that person is promising 15, 20%, you have to check, okay, in this era, which sort of business is he going to give that money which can give 15, 20%? So you have to be very careful, right? And yes, for a short term, they might deliver, right? But eventually in the long term, you might lose your money. So those are Ponzi and pyramid schemes, very famous in Sri Lanka historically. Now the central bank has put some regulations which can protect you. So be aware of the individuals and the institutions you put money for. Then the other side of things is, for example, you might get a message onto your phone saying, put something, and then you might get, you won a lottery or something, right? You might get $1 million, ₹1 million. You might accidentally go and, click this, and, you might give your bank account details. You might, do something like that to see on the back end, it's a hacker, right? So you have to be, again, very careful. Sometimes, this is something personally, right? In one of the companies I used to work for had happened. You might get a email, right, from a person. It's actually from the hacker, right? Hacker has created, let's say your email goes as diane@gmail.com. Hacker creates an email called Diane, but without the I. Okay. Dan@gmail.com. Sometimes when you see it, if it's a long name, when you see the email, I might think that is actually you. And you're my boss and telling me transfer $100,000 to these bank account details. Now, if you have a lengthy name, right, you might miss some of these things, and you're in a quick hurry to do these transactions. You might actually do the transaction, right, to see it is a hacker. It has actually happened to one of the companies that I have previously worked in, right, and it had to go to the a bureau, financial criminal bureau, to get the investigation, right. And then on top of that, you are all using the internet. You are getting, when you go to certain websites, certain links, lotteries, all of that, etc. Spinning wheels. You click these things, goes to sites. They are able to trace your information, right? You have to be very careful. Sometimes certain banks, even now, say that they give you a link to follow because the hackers are creating a web page similar to that, right? And you click this thing, it goes to the hacker's page, looks exactly like the bank one. You're putting the password and everything. The hacker is able to trace the information from the back end, and he's using that and logging into your one and transferring money. So you have to be very careful. We are working in an era where you don't have, like you said, robbers coming and pulling money from your house, right? This is all happening in the tech era. Now you have to protect yourself from the new threat, data threat.
And Mahesh, my last question. So at the start of this program, we said that there are about like 70% of the global population. They are being listed as financially illiterate. Also, the most important three financial reporting documents where like can help you to be a smart investor and smart with your finances. Again, the 90% of the global population are not technically aware of it. So, can you enlighten these young ladies and gentlemen with those three important financial documents to be that the elite 10% who knows about it?
So if you take the three financial statements, the three core ones, I would say, is your statement of comprehensive income. Is also called the income statement, but traditionally everybody knows this as the P&L, profit and loss. So it starts with your income or your revenue from the sale of your goods, and finally comes to the profit after tax, so the net profit we say. So what is this net profit or the profit after tax? So essentially, if you take your income statement, it captures all your incomes and deducts all your expenses. The income statement or statement of comprehensive income is actually prepared on what we call in accounting called the accruals concept, not the cash basis. So not when the money is received in cash or not when the money is spent in cash, you record it. When the income is earned, you record it or recognize it. When the expense is incurred, not when it's spent, you record it. Then you arrive, after taking the incomes and deducting all the expenses, you arrive at the profit. That's what you want to achieve, right? But if your expenses are higher than your income, then you're ending up with a loss. If you have a profit or a loss, neither profit or loss, it's called a break even. situation. So that's what the statement of comprehensive income does. It's one of the main tools any company, any individual should be savvy of, especially if they're investing or is in a business. They need to understand how the company is doing. So from that, then you move into the statement of financial position. That's what we call it now, but traditionally everybody knows this as the balance sheet. The balance sheet is a categorization of all your assets, liabilities, and your capital, or what we call equity. So assets are the resources which a company or an individual owns, which generates benefits. For example, your properties, your inventory, your cash, right, your machinery. These are captured under the asset section in the balance sheet. Then you have your liabilities. Liabilities are the obligations that you have to third party outside individuals or corporations, which you will capture in your liability section. And then you have the capital section or the equity section, which is essentially what the owners or the shareholders have a right to. That is the money that the individuals have put into the business. And if you have made profits accumulated over a period of time, that is captured under the equity or the capital section of the balance sheet. So these two principal statements, then the additional one that we have, which is actually the statement of cash flows, is giving a good understanding of the company situation in terms of cash flows. It will show you the cash inflows and outflows with regard to three main activities. The operating activities, that is the inflows and outflows the company will earn and spend on its day-to-day operations. Then it will show the cash flows from your investing activities because you might invest in machinery, buildings, land, etc. Sometimes you might sell some of your investments. So all of those under the investing activities. And for you to invest, you need money, financing. So you have another section called the financing section, which shares to the user of how the company finances its investments and assets. And then at the end, it shows the net movement of all of these three activities, operations, investing, and financing. Of course, again, you want to have more inflows and outflows. And at the end, what is the cash position that you had at the end of the company? Of course, you want to have a big balance at the end, right? That's your objective.
Mahesh, thank you so much for the pushing the envelope of the knowledge about the fundamentals of finances among the youth, and also for making them that the elite 10% who understand the basic nitty-gritties of finances. And having said that, in addition, we also have our comment section. There are four questions being mentioned, what generally being used to measure that if someone is financially literate or not. So after this program, as a reinforcement, you all can try that out and understand where you stand, where you had been originally before like watching this podcast, and where you stand now. And again, thank you again for your time and for the great impact what you had created. So we are looking forward towards a nation of financially literate individuals.